All right, guys.
Whenever you're ready, just go ahead and point.
Give him a point.
Point at Will.
Cool. Are you ready, Will?
Give him an aggressive point.
I volunteered at the bookstore across there for about 15 years until right before COVID. But the last stroke I had,
Let's do it. I'm not sure if he's ready for me yet. Good. Okay. All right, guys. Well, thank you all for coming. This is a Bitcoin 101 discussion, especially with the number of people we have in the room. We can do quite a bit more discussion than presentation. So if you have any questions or anything, just throw your hand up. We can pause and explore any of the ideas a little bit further as we go. To get us started, I'm going to just tell you a little bit about myself. I am Drew, Fayetteville resident now since about 2011, and I love Fayetteville. I discovered Bitcoin back in 2019, actually in August, so about 3 years on the money for myself. And during the pandemic, I was spending a lot of time at home and got really into researching a lot about this. I spent a lot of time reading, watching YouTube, podcasts, really just trying to grasp what it meant, why it was such a big deal, especially during that period, why the price was going crazy, kind of a lot of the reasons that people get into Bitcoin originally. And that led me through 2021. I went to the Bitcoin conference in Miami, met a whole bunch of other people, learned a lot more. And that was where I first learned about people starting grassroots meetups all across the country in their locations to talk to people one-on-one in person about these things that can be quite difficult to understand. Which I think is the reason we're all here, is to learn a little bit more and get a little bit better grasp on what Bitcoin is, why it exists. That led me to starting to organize the NWA Bitcoin meetups. Matt here attends pretty regularly for us. We've done one every month, I think 1 or 2 extra ones in there, so this would kind of, if you count this, be about our 10th event or so. We discuss Bitcoin only, so I know there's a lot of other things that are out there that you've probably heard about, read about, whatever other thing you might be involved with. We're not going to discuss any of those projects with NWA Bitcoin. We focus on that for a variety of reasons we'll dive into as we go through this presentation. Mostly we like to just get together in person and try to help each other build our Bitcoin stacks and answer questions, discuss what's going on in the industry, new ideas, new hardware, new software, new companies that are coming out, and really just kind of encapsulate it all with other people that are interested in this. So today we're going to be kind of base layer understanding why Bitcoin even came into existence and what purpose it is here to serve. As far as NWA Bitcoin, primary goal is to grow and connect Bitcoin community in Northwest Arkansas. So usually our events are up in Bentonville. This is our first Fayetteville one. Looking to do some more stuff in between in Springdale Rogers, so it's kind of an in-between spot for people. Tonight's discussion, we're going to have kind of 2 parts to it. The first is going to be, what is money? We're going to just start with everyone, a concept of money, put some definitions, characteristics, purpose to it. And then we're going to dive into Bitcoin and what it means, why it exists, and why it is a better money. And that being said, I think we can kind of dive in here. And as we go, like I said, if you have any questions, want to explore something further, just throw your hand up and we can see what we got. First off, what is money? Would anyone like to offer their idea of what money is before we dive into some definitions, if you will, by the book definitions? Any takers?
It's the medium of exchange.
It's a great one. That's one of the three functions for sure, probably one of the most important functions. And with that, perfect piggyback spot, because our next slide's exactly about that. Functions of money, medium of exchange, right there on the money. Medium of exchange basically means if I have cows, you make glass bowls, I don't have to trade you a cow for 1,000,000 glass bowls that I don't need. You're providing something that you can use to trade for goods without having to find someone that fits your exact need every time. So most widely accepted today is the US dollar. You can go just about anywhere in the world and people are going to recognize the green dollar bills. Pretty easy to understand. I think the medium of exchange function here, we use it day to day, whether it's with cash or swiping the card. That's how we get goods and services that we want to use. Sometimes we need them, sometimes they're frivolous, cookies and whatever else we just want. The next thing is a store of value. And what this gets into is that you know your $100 today is going to be worth, you would hope, $100 X period of time from now. We all are pretty familiar with today's times where we've been running into inflation numbers that are making that erode rapidly. We'll dive into that, but the primary goal of store of value is that it'll keep liquidity for you. So if you save it, you'll be able to spend it at a later date. Unit of account is the third function of money. And this one, you probably don't think about too often, but it helps you keep track of what things are worth. So, it's kind of going for, the nice projector is a very expensive piece of equipment, and you can say it's worth how many dollars. So it gives you a scale for what something is valued at. We see different, you go to the grocery store, you see different butters. You got your spray butter that'll be 99 cents. Then you've got your churned butter by hand, and they're going to put a higher value on that. So you know what that unit of account is across the board. Characteristics of money. So all money has these 7 characteristics, and some of them have them stronger than others, but the goal is you would want to hit every single one of these boxes. The first one is fungible. Means that you can trade $1 for $1. It's going to be the same thing. Divisible, $100 can be divided into one $100 bills, or 100 $1 bills, or $1 can be divided into 100 pennies. Acceptable, you can go someplace and use it as that medium of exchange. Limited in supply means that that's what helps keep that store value. So if there is no limit on that supply, we see that value plummet over time. Uniform, same denomination, so $100 is $100. It's not your $100 is worth more than my $100 because you have it. Nothing like that. And an important one on that is within the same money. So 100 US dollars is going to be worth more than 100 pesos. So it's important to differentiate those. Portable, you want to be easy to carry it. For a long time, people used coins, rocks, other things that were not very portable. Today, the bills, pretty light, pretty easy to carry. You don't see people with many coins. We've progressed to getting even easier with just a piece of plastic that can hold large sums that also keep that kind of hidden from how much value is actually in there. And durable, you don't want your money to get wet and deteriorate, or, even though the bills are light, you don't want them to catch fire. Dollars are a little bit hard to burn if you've never tried. Kind of a fun experience, but not necessarily the best thing to do. Could also be a little painful. So these characteristics are what you would ideally want your money to have strong points on all of them. And this is where we're going to get into some historical monies. Historically, we've had hard money. For a long time, people have used different kinds of hard money. The one most people are familiar with is going to be gold. There's some reasons for this we'll dive into in a bit, but gold checks a lot of these boxes. It's fungible, divisible, it's not acceptable. You can't go someplace and say, I want to buy a house with a gold bar. Limited in supply, though. To acquire gold is very difficult. It takes a lot of energy and resources. So you know that value of gold is going to be maintained over time. All gold is the same as a base element. You can't dilute what it is. In the past, people have made gold coins and cut them and cut them and cut them. That doesn't mean the gold is not worth the same. That means the supply of that coin that they are denominating is worth less. Gold is not very portable. If you're unfamiliar, 1 gold bar weighs 30 pounds. So if you want to try to carry around 2 of those, you're getting to 60 pounds already. Even 1 of those is going to be quite a chore. So even though it looks small, and you see guys in movies running away with a duffel bag full of gold, it's really not feasible as a portable good. It is durable. It is, like I said earlier, a base element, and it doesn't rust. It doesn't. It does melt to be divisible, but it isn't. It's not going to just dissolve if you leave it stored anywhere for a long time. After gold, we have fiat money, which is what we're probably most familiar and use most commonly today. Again, everyone in this room, I imagine, is familiar with the US dollar. It is taken the place of gold over time. And the US dollar hits a lot of these characteristics you want, but the main one it misses is limited supply. I want you guys to hang on to that for a little bit later. But it is, there it is. Oop. Durable is the one I didn't put it there just because you can rip a bill in half, and technically it's still honored, but some people might not accept it. When you compare the two, it's not there, so we'll put that at a 50-50 on the durable. But limited supply is definitely the low spot for it. Any questions so far? Characteristics of money? Awesome. So how the US dollar works. Does anyone want to put any ideas for this one? Kind of how dollars are created, how they're brought into the system, anything like that? All right, we'll get in it then. There's kind of 3 things that go on here. The Federal Reserve is going to set an interest rate. In the news recently, you've heard a lot of conversations about interest rates rising. What that's telling us is that to lend money is going to cost the banks more to do. So the banks, in turn, are going to lend less money and charge a higher interest on it. So that's how a tool the U.S. and the Federal Reserve uses to constrict the monetary supply. They want to have less dollars out there, so they increase the interest rate. In the opposite scenario, they're going to lower that interest rate, and the banks are going to take that as a sign that they can get more money cheaper, and they're going to pass that on to more customers, us being the customers. The Treasury is the next piece of this puzzle. The Treasury is where our dollars and coins that we use every day, that's where those are printed at, minted at, if you will. They are the ones that enforce and collect taxes, the IRS. They manage public debt, which means the federal government debt, and they are the ones that issue Treasury bills. Treasury bills are what every commercial bank has to hold on their balance sheet in the way that they would hold gold historically. So Treasury bills is kind of where the whole US dollar gets its value from, and that is based on faith in our US government, that they are going to maintain their promises on their T-bills, that they're going to keep that value secured globally. Anyone, do you want to add anything on that one?
I was going to say, Treasury bills are essentially like short-term bonds, right?
Exactly.
I think people have an understanding of what a bond, I think, is.
Right. Short-term bonds is what he was saying is a T-bill is like. So those all kind of come together, and that's how the new dollars are put into the system. Banks are going to lend out, so the banks are creating dollars when you have a low interest rate. The Treasury is going to print money like they did in 2020 with the stimulus checks. That all came out of the Treasury minting new money and adding it directly to the money supply.
So how short term? What's the term for T-bills? Is it 3 months.
You want to answer that one for sure?
Yeah, I think 3 months is typical. I think they're all the way down to 1 month.
Okay.
And there might be,
Because they can be bought and sold on a secondary market, so you can hold it for a month and then you can sell it with a 2-day term left on it. So this can get into the weeds a little bit. Most of this we're trying to stay just on the skim level for it tonight.
but a bond is debt.
Correct.
So the banks hold government debt to match their liabilities, which are the currency dollars.
Right.
So all currency dollars are debt held by or issued by typically the government.
Right.
I think another important part of that too, and it's often not talked about, is like overnight lending between major financial institutions. I mean, you have like tens and hundreds of billions of dollars, if not trillions of dollars, that are lent between organizations overnight for just 24 hours.
That's commercial paper, right?
No, actually, this is like overnight Fed funds or repos and things like that. They're completely different instruments, but they're part of the debt mechanism. But sometimes you need that sort of liquidity in the markets even to just, you have that much money passing between institutions. That's a really big part of it as well.
Right. And then you can even dive into offshore dollars that are generated in the euro dollar system. So there's a lot of things that go into the dollar supply. It's actually near impossible to put a exact number on how many dollars are in circulation, because whatever the Fed sets that interest rate at, this is just one example, a bank can lend out as many dollars as they want based off of that, and however many T-bills that they have, or T-bills and bonds, and what their liability to debt setup is. So while the Treasury prints money, what the Federal Reserve does is not determining how many more dollars are entering that ecosystem under their supervision. So the Treasury can say, yes, we're going to put $3 trillion into the system, but when the Fed raises and lowers that rate, they have no control over what banks are going to lend out based off of that. So that just creates a big question mark. Is that all right on there? I know that's a little bit confusing. Over time, the US dollar we're all familiar with has changed. So we'll start on this thousands of years of the graph. Humans in society had used beads, used cows, used sheep, used numerous different things to create value. But the cream that rose to the top was gold. For the properties we went over earlier, gold came to be accepted everywhere. So, if you go right up until the start of the 19th century, gold reserves was how you determined your wealth. First Federal Reserve was created in 1913. And let me back up for a second. Chart showing the value of the dollar decreasing over time. And this is based on one $20 So $1 2 years ago could buy you 10 bottles of beer in 1933. Today, it's going to cost you $19.91. So this is the dollar losing its purchasing power over time. And these events we're about to go over are how that happens. So First Federal Reserve is created, and that was right after an era of private banking across the country. No one was controlling what rates were set, what was going to be happening. It was the wild, wild west for banking. The first charter for the Federal Reserve was short-term, and when that charter expired, the Federal Reserve expired. It is not the same Federal Reserve we have today. That is a whole different history we can go down, but these are just some big points. Stock market crash that led up to the Great Depression, was that 1929? Big event. The entire country's in a panic. No one can get jobs. No one has any money. Everything is just falling apart economically. And then in 1933, President Roosevelt and the society at the time decided that that was because people were hoarding their gold and they weren't letting it into the system to provide value to other people. So they make it illegal to hold gold at that time period. So if you had any gold, you had to go bring it to the federal government, or they would come and take it from you, and they would give you a promissory note saying that your gold is with us. You can come and bring us this bill and redeem it for gold I don't know the exact stipulations on that whole part, but the main thing is it was an executive order that took gold out of the individual's hands. All of us, if we had our gold coins, we had to give it to the federal government. Not too long after, in 1944, 44 nations got together and established the first Bretton Woods Agreement, where they established the United States would hold gold in Fort Knox. The gold they collected, gold from abroad, and they were going to issue U.S. bills based off of the value of that gold. That gold that was stored there was not redeemable to you and I with the bills anymore. However, foreign governments could acquire U.S. dollars and redeem for that gold. So between that period of 1944 and 1971, these foreign governments figured out that they could hold gold instead of dollars. Everyone's going to want to hold gold instead of dollars by doing it, and they would do an arbitrage. So in the 1960s, the U.S. dollar was just plummeting. It was a mess. The inflation was rampant. So then the gold standard is abandoned completely in 1971 at Bretton Woods number 2. And that is where the 44 countries, I say 44, I don't know if it was 44 in 1971, but that was where they decided in this time period the U.S. dollar and their T-bills and their debt is going to be the basis of all currencies moving forward. There is no more gold-backed dollars. So this is where we transition, and this is an important part, off of the value of a hard money to what we call the fiat money. And you can see from that point, moving forward, the value of the dollar has gone down. This is primarily due to there being no restriction on how much money you can put into the ecosystem. Fast forward a little bit, you have quantitative easing of 2008. I think everyone in here remembers how painful that was in the U.S. economy. I think I had a note I wanted to say on that one. Yeah, it just exasperates the value loss of the U.S. dollar. And then we have in 2020, $3.8 trillion were put into the market from the U.S. Treasury. That is 20% of all dollars that had ever been created. So it just pumps dollars into the financial markets. And that is strictly in the United States. That has nothing to do with the abroad systems we talked about previously. So if we zoom in on that, 1971, we removed gold as a standard for dollars altogether. You see immediately value loss in the dollar. And if you take into account that's at this point from where it was previously, just plummets. 32.3 times the money supply in 50 years, 84.1% less purchasing power. So what happens when this is ongoing is you get to an area where people start realizing this, and they start putting their money into things that are going to hold value. Your property is the big one. But property isn't a store of value. So you get to 2008, and that's when we have the financial collapse of 2008, because people are flooding money into something that is not supposed to be a monetary function of money. So that we get 2008 is the birth of Bitcoin. It comes directly from the white paper on your right, which this is the original code of Bitcoin that was released to a handful of cryptographers at the time by Satoshi Nakamoto, who is completely anonymous to this day. We don't know if it's one person, male, female, a group of people. You can get into some crazy theories about aliens or an AI. Who knows how this came about. The person is completely anonymous. So October 31st, 2008, this paper is released. And then I believe it's January 3rd, 2009. This is the code of the Genesis block of Bitcoin. And they embed in that block 2009 Chancellor on the brink of second bailout of the banks. So this is an indication that Bitcoin is designed specifically to replace every other currency as the reserve currency internationally. Any questions before we get into the Bitcoin stuff? Comments? I kind of rolled through a lot of dollar history right there.
I'm going to hold my comments to not derail this whole thing because I got lots of questions.
Okay. Well, I'm trying to go through quick enough. We get time at the end too. So we got a little bit to jump through here and about halfway through our time. So what is Bitcoin? The most simple answer, peer-to-peer electronic cash. It means I can send you things, you can send me things. It's going to be secured. It's going to have value. We agree that it's going to have value. We can use it to say that that water bottle is worth 0.00002 of a Bitcoin, whatever it might be. That's the most basic answer of what I can give you guys for Bitcoin. How it works is where we get into the nitty-gritty, because this is what secures the whole thing here. Blockchain. It's a buzzword we've all probably heard at this point in time. Blockchain is the innovation that Satoshi released with that white paper. Before that, there was no blockchain. There was time-stamped ledgers. There was a number of other things. I think in 1991 was when they came out with time-stamped ledgers. And basically, since the start of the internet, a bunch of cryptographers and cypherpunks had been building different tools. Satoshi Nakamoto was able to pull those tools together to create blockchain. What is blockchain? It is simply a ledger, like history has always had. You sell your jewels here, or you store your jewels here, you travel the world, you come back, you exchange some so you can charter a ship. You bring apples to one place, they're keeping track of this, who owes who what on a ledger. Bitcoin makes the ledger auditable, viewable, and accessible to every person on the planet that has internet access. The ledger is made up of blocks. These blocks are in sequential order at a specific time. Each block contains three things. Data, which in the case of Bitcoin is going to be transaction information. It's going to be Bobby paid Sue how much. It's going to be the hash of the previous block, which is going to be a fingerprint is the best way you can think of a hash. And it's going to be the hash that the next block needs to be added to the chain. So there's three things in there. This is what it looks like. So this is our Genesis block. That first page, Chancellor on the brink of second bailout of banks, that was the data that was in the first block. Because it's the first, it doesn't have a hash. And what it does is it provides, this is an answer that the next person to try and get this block is guessing. So there's a computer that's just constantly guessing until they get this answer, and that'll point to the next hash. So it's going to fingerprint each one together. The same thing will happen. This one will provide what the answer should be for the next hash, and it goes on forever. This has been going on since 2008 without stopping. How new blocks are added, or what I like to call hashing nodes. Other people call them most commonly miners. These are dedicated computers that are constantly trying to guess that hash. The way a hash works is you put an input and it's going to give you a very long sequence of letters and numbers that are just, like I said, a fingerprint. That first miner computer to get that correct hash is going to add the new one, the next block to that transaction. In that block, they're going to put all of the transactions that people want to submit, which will be based off of a fee mechanism. And then they're going to broadcast that to everybody in the Bitcoin ecosystem. And that broadcast is where the next step comes in. But important thing to note on this, compared to the US dollar, the only people that can put US dollars into the system is the Treasury, and then the reserve rate that the Fed sets allows banks to do it. Anyone in the world can add a block to the Bitcoin blockchain. When you add a block, you get a reward for doing so. Right now, the reward is 6.25 Bitcoin. So that's the incentive to set these computers up to make this hash. In theory, you can do it on a piece of paper flipping a quarter over and over and over again. You probably won't win because there are thousands of computers, millions of computers, maybe billions, I have no idea what the number is, that are designated to only solving that hash working across the globe. So once they get that, they broadcast it. They broadcast it to the network, which is going to be validation nodes. I like to call them rule makers. This is where everybody's agreeing upon the same rules that make Bitcoin Bitcoin. We're going to get to those in a second. These are also done with a designated computer. They take that in. Each one of those has the entirety of the blockchain stored on it. So from 2009 till now, they have every single block that was ever added to the chain and every single transaction that was ever done and put in that chain. So you can go back and see where those initial coins that Satoshi had, where they've gone. And they haven't moved at all because he produced it anonymously and disappeared. If they did move, it would be an explosive event in the space. So after these are broadcast, everybody sends it to all the nodes. The transactions that you want to send Bob to Sue is confirmed once you have 3, is kind of the rule of thumb. Over time, you'll get many, many more than that, but that's when you're safe to assume that the block added matches the previous block's thumbprint and is following the rules to continue adding new blocks to this chain. And then it's recorded on that blockchain and everybody else's, so I can go and say, mine matches yours, mine matches yours, mine matches yours, and the program that does this does that automatically. Anyone in the world can do this as well. There is not a gatekeeper, a Federal Reserve chair, a auditor, anybody that is going to be cooking the books, making anything fudged here, fudged there, anything along those lines. So everyone can enforce the same rules we all have to abide by. No one gets a special rate, no one gets any special this or that. You have to volunteer to use it and come to a consensus on the rules that are going to be followed. What are those rules? There's a couple. There's only 21 million Bitcoin that will ever exist. So when we're looking at our characteristics of money, that is a limited supply. It is the most limited supply of any asset that has ever existed throughout humanity. Even gold has about a 2% inflation rate as it's mined. If you want to go down a sci-fi, maybe we're going to be mining asteroids at some point and increase gold supply. Bitcoin is going to remain at 21 million. That was put in from the Genesis block, and to change that, you would have to go through an immense amount of computing power. And even if you do that, the validation nodes can reject that, and you can make a new token, but it might not have any value because no one wants to use it. Every 210,000 blocks mined, the reward gets cut in half. So right now I said that's 6.25. So you spend all your energy, time, resources mining that block with your computers. You get 6.25 Bitcoin for that, which today is about $20,000, so 120 grand for solving that next Bitcoin. And this comes out to about every 4 years. So every 4 years, mining rewards cut in half, so it'll infinitely be cut in half, approaching 0, never quite getting there. To keep anybody from coming in and just bringing on all the computers, a supercomputer, and changing it, the difficulty adjusts of that guess and check every 2016 blocks, which I think is about every 2 weeks. So every 2 weeks, the algorithm is going to automatically adjust to be harder or easier. So for an example, China outlawed mining 2021, I believe. So a bunch of miners came offline. And because of that, it was really hard to solve a block. And so what happened is 2 weeks later, it adjusted down so that it kept on pace for getting a new block added to it every 10 minutes. Every Bitcoin block is backward compatible, and every improvement on the protocol is backward compatible. So if you have a Bitcoin from 2008 It doesn't matter how far into the future it is, it will still work on the Bitcoin blockchain and be added to a future block if you want to send it 100 years from now. Any questions on the rules? Okay. This is kind of a visualization of what that looks like. You have a miner, and it's in each block, sending it to the nodes. They talk to each other, say, yeah, that new block added is correct. Send it back to the miner, confirms it, and it keeps going on. Back and forth every 10 minutes. That's going on. And why do we want to do any of this? That's the real question. Well, like we talked on earlier, the US dollar is just losing value. It's hurting a lot of people internationally. We're probably the last ones to feel it here in the United States. Bitcoin is a better money. It's open, free, and accessible to everybody. The value of Bitcoin can't be inflated away from you. It's completely transparent. There's no secret anything about it. You can go on and see every transaction that's ever happened. And no one can own 1 million Bitcoin and have more say. Those same rules are going to apply no matter how much of them you have. So in terms of money characteristics, Bitcoin is the rock star here and hits every single one of these, except for maybe acceptable. I didn't put it on there yet. I know that I personally stock my freezer. I pay Bitcoin for that. I know that I pay my friends to go out to dinner with it. I've bought drinks with it, but it's not everywhere I go. I've been to countries where I can use it, but it's the one thing that will grow with time. It will only become more acceptable as time goes on. So it checks all the other boxes that are set in its base code, the building blocks of all of Bitcoin. What Bitcoin is not: cryptocurrency. And it is a cryptocurrency, but when people say cryptocurrency, they're talking about an ecosystem of over 20,000 different cryptocurrencies that have existed. 99.99% of those will not work. Web3, DeFi, NFTs are all buzzwords. They are not currencies. Bitcoin is created to be the world reserve currency. These are all fun tech projects that they derive value from. A lot of them pump up the price, and then they dump once the price gets to a certain height on retail investors like ourselves, and people lose life savings. It happens every year, all the time. There's recently, in the Bitcoin space, there's been quite a few of these pump and dump schemes that have unfolded, and Bitcoin is a cryptographic currency, but it is the only one that is truly a currency. All these other ones are piggybacking off of the blockchain technology to provide something that is not secure, that is centralized, like all of the US dollar historically has been, and does not provide any new innovation into what money at its root is. Central bank digital currencies might not be as familiar to some people. This is like a digital yuan. Bitcoin is not one of these either. These are centralized. It is in the name. One government is going to control how many there are, what you can spend it on, how you can spend it, all the whole 9 yards. Bitcoin does not fall under that. No one can stop you from using Bitcoin because no one controls the network on their own. Misconceptions. I'm not going to touch on all of these. One that drives me crazy is that it's for criminals. Yes, criminals use it because it is the better money. But that doesn't mean it's for criminals. I know hundreds of people that use it for normal things. Like I said, I stock my freezer with meat for it. It cannot scale. There's already projects that are going on right now called Lightning Network that enables you to do batch transactions. The government will shut it down. I've gone through the shutdown phases 100 times. The only way I think that could happen is if they shut off all the internet, which would mean they could not communicate with each other. Every other payment system will not work. Everything that we do today basically would shut down. And it is not secure. I mean, we just went through all of the reasons that it is secure. There's nothing, I think, that is more digitally secure than Bitcoin when handled properly. Using Bitcoin, you don't have to be a miner. You don't have to be running a validation node. You only need 3 things: internet access, a computer or smartphone, and to download a wallet. And then really you can do all of these on paper as well. It's just a lot more complicated than it's going to be worth. You can go on the App Store. There's a bunch of options to download a wallet today and get Bitcoin, send Bitcoin, accept Bitcoin, and it's almost near seamless. It's intended to use peer-to-peer. So when I send you Bitcoin, it's not going to a bank who's going to talk to my bank that says, yeah, they have this money, we can do it, send it to them, okay, yeah, we're good to go, and settle it down the road. It's going to be operating 24/7, final settlement between each other. It is a bearer's asset, which comes with a lot of responsibility. Your wallet is going to have what we call keys. These are going to be 12 to 24 words, dog, cat, clock, in a row, that are what allow you to access your wallet. These keys, if they are lost, there is no customer service of Bitcoin to call. You cannot get that money back. So it is very important to understand how to manage your keys properly. Up here are some of my favorite Bitcoin wallets. This Samurai wallet is much more technical. I would recommend Moon or Blue wallet if you want to try and do self-custody of your Bitcoin. I hope to get with Cassidy in the future for a Bitcoin 201 on self-custody exclusively. I think there's a lot to take into account on that part of Bitcoin, but it's also one of the most powerful things. You don't have to rely on somebody else to hold your money for you like the bank does. We have so many restrictions today on what you can do. If you try to deposit too large a check, they'll hold it for a week before they let you do it. They're like, oh, all of a sudden you made a bunch of money. Shame on you. We're not going to let you spend it. Here's a couple resources. I'm happy to share this presentation too, so you don't have to write all these down. But I will just, little disclaimer, these two are companies. I get no kickbacks of any sort from them, but they do have great intro to Bitcoin information on them, and they do have options to help you hold your Bitcoin without that potential of losing everything. In person, if anyone's not from here and happen to come by because you're visiting, other local meetups, but NWA Bitcoin that we meet at least monthly. We're always chatting, talking about different things. We've got guys that are running mining operations 24/7. We have people that are doing software updates, building things. So there's a lot of information to be shared in person. Also a little easier to talk. Even a presentation like this, it's hard to grasp everything. I know you said you had a bunch of questions, so we'll try to get into those. I'm a big podcast listener because I drive a lot. These are a couple that are Bitcoin-only shows. You'll find a lot out there that talk about all those 2,000 other cryptocurrencies. And these are some very good entry-level books. This one in particular talks about a lot of the things we went over today. Just to leave you with some fun teasers you might not be aware of. Bitcoin is legal tender in 2 different countries. I've been to El Salvador myself, used Bitcoin when I was there to buy my pupusas, to rent a surfboard, check into my hotel, the whole 9 yards. I think the Bitcoin logo and name is recognized almost internationally. I would say worldwide, or I said worldwide. I'm sure there's some places that have never heard of it, would look at me like I'm an alien talking about it. This one I think is awesome. Annual settlement volume on Bitcoin was higher than Visa in 2021, which is a massive feat. Visa is supposed to be the largest processing company in the world, and Bitcoin exceeded that. These last ones, I have my own thoughts and feelings on, but I think that they do speak to how much is going on and how much attention is being paid into the industry. From Bitcoin mining to financial tools being built on Bitcoin to building the hardware that is used for Bitcoin. Again, all of these are big companies. I think Bitcoin's for the little guy, so they're coming into this space is something I don't personally love, but it's getting a lot of attention, time, resources put towards it. And we're still early, folks. There's a lot to be done on Bitcoin, a lot to grow, learn, and experience with what this can do for humanity. And a quote. This actually just came out the other day, so I threw it on here. Since the dawn of history, the person with the bigger stick has been able to take the person with the smaller sticks money away from them until Bitcoin. If you hold your own keys, you practice self-custody. The only way they get those is if you verbally tell them. They can't go and steal your gold from your fort. They can't inflate it away from you. Your Bitcoin is your Bitcoin as long as you properly custody it. Again, hopefully we can do a 201 about custody in particular. And Michael Saylor, if you're not familiar, is a very big person in the space. Does a lot on a corporate level. His whole focus is on acquiring as much Bitcoin as he possibly can to fund education for children, basically for infinity is his goal. And thank you. That's all I got for right now. As far as the NWA Bitcoin meetup goes, we do have a website. It's pretty rudimentary, but it is there. The email, you can send me anything, and we have a Twitter as well. Feel free to follow that and do any DMs on there. We only have a couple minutes left here, but if anybody's up for it, I was thinking we could continue conversating at Loaf and Joe's up the road. If anybody's hungry, wants to grab a beer and dive into some very specific questions. But right now, I know there's a couple of questions out there. Is there anything in particular you guys want to discuss, talk about? We got a couple minutes left here on the live stream.
I think my question's gonna take a lot longer than.
All right.
But I'll have a beer.
Growl and kick you guys out at 7. So if you guys have questions, feel free.
And I would mention.
Yeah, or anything on this,
Yeah,
for
I
sure.
talked about self-custody. You really can't buy Bitcoin with those wallets.
Right.
You really have to go to a third-party exchange where you can deposit dollars with your credit card or your debit card and purchase Bitcoin on those exchanges. You can leave your Bitcoin on the, and this is going to be contentious because people that are really into Bitcoin and the ethos of Bitcoin want you to take self-custody of your money. You can leave your money on Coinbase, is probably the most popular exchange. You can leave your Bitcoin on that exchange like it's a bank. The risk with that is if Coinbase goes bankrupt, you're not custodying your Bitcoin. It'd be like the same as...
It's also unsecured. So there's no FDIC insurance that your $250,000 will be yours. If they go bankrupt, it will be considered part of their bankruptcy settlement. And then I guess the U.S. government will hold that and be distributing it later. Or maybe not even the U.S. government. It could be whatever creditors they owe. On that, I forgot to mention, I'm glad you reminded me, if anyone does want to set up, we're not there yet, a Moon or Blue wallet to get you started on Bitcoin and get you off of the 0 sats, I will send some to you today so you can see how it works. I've got it set up on my phone. Happy to help you walk through the steps while we're here before we leave. So don't hesitate. I love doing that, getting people to see how powerful Bitcoin can be in person. Oh, yeah, I didn't even touch on that, did I? So Bitcoin, we talked about being indivisible. Let me get back here a little bit. Where's divisible? Divisible. So one Bitcoin is made up of 100 million Satoshis. So that's the smallest unit of a Bitcoin, and it's a great point, because a lot of people think you have to go and buy $20,000 worth to get one Bitcoin. Reality is you can, I think, there might be a limit if you're using an exchange, but I can send you 1 penny worth of Bitcoin tonight. If you wanted to see that happen, we could do it. I'd rather send you a little bit more. But today, $1 will get you about 4,500 sats. Sats is short for Satoshis. So the divisibility factor is, even though there's only 21 million, you multiply that by 100 million is how many dollars, or I don't want to use dollars, how many sats there are in the system. And I don't know that many zeros and what that number is off my head, but it's a large number.
That could be further subdivided in the future.
It could. That's getting into some technical stuff. But for now, Satoshis is pretty well. I mean, if we get to a situation where 1 Satoshi is $1, I mean, Bitcoin made it at that point. So, but yeah, very good point to bring up. Yes, so when I said I will send Bitcoin, I am not sending you $20,000 this evening. It will be Satoshis, a percentage of that. Any other questions, comments, things to add? I know it was a pretty quick run through of US dollar, gold, US dollar to Bitcoin, but they all kind of tie together, and that's why Bitcoin is here. That's why we build on it, talk about it.
The best way to find when and where these next meetings take place, and probably in Bentonville, you said, is to go to this website?
Yes, so, oh, I'm going the wrong way. Whatever. Yes, NWABitcoin.org. The website is, I'm not a WordPress person. I'm doing it myself right now. I update it. There's not a whole lot of information other than maybe when we are meeting on there. Do you know when our next one is? Is it the 14th? Whatever. I can't find it. I believe it's September 14th is the next meetup. It's usually about 6. And we're actually, I hate this, but we're in the middle of changing our location right now. So that will be updated on all of that. But it's going to be about 6 o'clock, 6:30. And we get together and dive into exactly this kind of stuff.
And can we get put on an email list with this email address?
So I don't have a mailing list going out, but if there's any questions or anything you want just in general, happy to respond to that. Again, mailing list is kind of something I'm working out. I haven't really which I actually need Bo's help to do because that's exactly what he does. But yeah, so some of that stuff we're working out right now. But you send something to it, I'll be responding to it or getting help from someone that knows a little bit better. We've got some guys that are real good on mining. I can point you in their direction. Software guys, the whole 9 yards.
Do y'all typically meet at restaurants or libraries or?
So we've been meeting at a spot that's like a WeWork setup. So it's kind of a shared office space, and it's got one area that's got a kitchen and lounges and projector that we can use. But we're going to transition away from that because it's really difficult to find it. And then we also have we were able to use that because one of our members was working there, but he is no longer working there. So I hate that it's kind of up in the air for you as far as those answers go, but that's where we're at right now.
Well, I do a lot of networking, so I might be able to, if you give me an idea of what you're looking for, I might be able to point you in the right direction. Maybe.
Yeah, bar restaurant setup is kind of what the ideal would be right now. So if you know someone that'll take some Bitcoin for it, would be even better.
I'm just getting into this, so I don't know.
But if you find it, let me know.
I do know they would take cold hard cash.
Yes. That's the second best. Anything else, guys?
Thank you so much.
Yeah. Thank you all for coming. I appreciate it.